What is good, guys? So let me go through this real quick. Just the overnight recap that is above the video here. Markets went wild on Wednesday as investors cheered the economic data and then realized its true meaning. Surprise decline in producer level inflation is good news for those concerned about inflation, but the retail sales figure suggests the damage is already done to the economy. Retail sales are up year over year, but fell more than 1% monthly as higher prices and rising interest rates cut into consumer spending. The takeaway from the data is that the S&P 500 pricing power may be headed out the window as input costs fall and demand for finished goods declines. The data that investors truly need to watch is the consensus figures for market earnings. The consensus figures are in decline for the first half of 2023 and are a dead weight for the market to bear. Now that index price action has reconfirmed resistance at the 4,000 level and the top of our downward sloping channel, it looks like January will end the market flat to down, which is not a good sign of what the rest of the year will bring. We do have to look at things like January effect and things like that, which we will get more into, probably not in this video, but we will get more into as we look at things a little further out and probably over the next, I'd probably say next week some point. So basically what we're looking here, we're going to go ahead and take a look through this real quick. So basically over the past several days, if not weeks, honestly, we've been warning about the critical 4K support that basically, and what happens if it is taken out with confirmation, right? We haven't had a big down day in some time while trading at very overbought conditions. So this was all culminating into a great signal alerted for a few days now since basically Friday, literally every day since Friday. We knew that if we did get one, it would be a big one, and that didn't disappoint intraday wise as we went beautifully to our second major downside target at the bottom of this monumental demand zone, which is basically that 39.60 to 39.45. This was also the largest down move, I believe, in at least 2 weeks, because yeah, looking back, so a beauty really. We've been stuck in the upper 4K to 4031 gravity point range for multiple sessions, and bulls have had more than, I mean, many chances, 5 legitimate chances, but they've had more than that to get out of this box, but they failed and failed big time today. And it's not just the bulls failing either that deserves noting, as the bears did step in where they needed to today. And it is notable as it happens to be the massive confluence of our core downtrend trend line that just so happens to be from exactly a year ago. So this is 1 year ago here. This is the January swing high, basically, exactly a year ago. And this huge trend line that I've got here in the dotted white all the way down, that's exactly where we hit again. See, even when you look back here, this is a 4 hour. Even back here, like in December, we weren't able to close above this huge trend line, and we talked about it then. So that's that core downtrend line from January 22 right here. So this is where we had to hit. We'll get tighter here in just a minute to get tighter in on this chart. But yeah, so not only was it that massive confluence there of that core downtrend line, it also happened to be the ominous 200-day simple moving average that was smack dab together as a brick wall. Basically, buyers could not get over and hold over on these failed attempts. And like we said, bears stepped in where they had to, but the big question is going to be, can they follow through from here? We'll take a look at trading these breakdowns and our approach like we did today. Also, we'll look at the bigger picture as always, and then touch on what we are watching for tomorrow's session into the options expiration for Friday coming right behind there. So, I mean, we have discussed extensively how markets endlessly cycle between 2 core market phases, right? Trend mode, chop mode. Today, the cycle continued as it always does. We had trend mode to the upside into late into the week last week. Basically all this stuck still in this upper trend box here. But we had that all last week into Friday. And then today the cycle continued as it always does. We had that upside last week and then chop mode for the last 2 or 3 days, which basically this whole week we've been just kind of chopping in here as we moved up here, right? So upper trend, lower. We moved up last week back into this upper trend and just been kind of chopping around in here. It is absolutely fundamental to understand how to trade these modes, and most importantly, how price transitions between these phases. Today's action was a great example of this. So looking at this 1 hour, let's go ahead and zoom in just a little bit tighter here on the intraday. And all of this will be posted, guys, as always from now on. Well, it's always been posted, but from now on we'll do these videos and then also have this all posted up as we always do. So you'll see the same chart exactly, just zoomed out with all the wording basically blocked in there. But this is looking at the 1 hour chart. It is it's quite clear where the chop mode basically based since Friday. You know, we're just all of this. I mean, just you can't. This is the textbook example of chop mode, right? So that's what we want to watch here. On this 1 hour since Friday, with clear support right around that 4K, and then just a very, very muddied up jumble of a mess resistance zone around that 4020 to 4031 gravity point. But you can really see this is it's just every attempt just consistently failing over and over. As we always say, you know, as traders with no crystal balls are required. You know, in other words, we don't need to know which way this will break. We just simply want to react when it does. Did we know if this was going to go up? No. Did we know that this was going to go today? Not necessarily. There's plenty of signals to tell us when to do that, and we just want to react to it. So doing this requires clearly defined support and resistance pivots that we give daily, that we talk about constantly in here, ideally with about 3 or more touches. We don't really consider it a strong level until it does get that. Now, yes, it gets a little crazy when there's, you know, 20 to 30 touches in there, which we've been seeing. But as we had at 4K last Friday from here, we can provide a buffer. We usually want to give about 6 to 8 points or so on these support resistance breaks, and then we trade that breakdown attempt below the base and the buffer into the next trend move. Right. This was our rationale for the low 39.90 short provided yesterday, and then you'll get caught in these failed breakdowns, breakouts, trying on this on occasion. But like we're always saying, this is the typical cost of business, and this often sets up another trade. So you've just got to have these clearly defined. Stick to the plan, guys. Don't get scared out of your positions. Don't let it get in your head. If you ever have a trouble thinking where you're at, stop, ask in chat, jump back to the plan page. It will be clearly defined in there, and then you can look okay, we did this, this, and this. This has not happened yet. This is where we're headed next. Boom, there you go. It's going to always be very clearly defined, especially when you can look at these recap charts and then read the daily plan. It's going to make a lot more sense there. Back onto this chart here. We alerted yesterday basically that we've been saying basically that a 4K loss would finally trigger the leg down, with the first target being the 39.75, which if you guys look, this is this orange trend line here. These haven't changed in weeks, which makes this really, really nice. Now it is down sloping, right? So these get lower and lower. Like technically it was 39.74-ish, but come on, 39.75. And then basically our the second target is going to be that 39.45, right? This is the first major dip since the rally that began on the 10th of this month. And with all pullbacks, what supports it holds with force will be key for answering if this move is a top or a dip. Recall back on the 6th, we broke out of a multi-week base at 3,900. That's actually shown on this with this purple line here that we've always had on here. And then on January 10th, we back tested it perfectly, and this led to a rally thereafter. There is no clear big picture bearish case until this fails at least. And then ultimately, basically the core rising channel from October, which is 38.75 to 80. And that brings us all the way back down into here. Okay, guys, so we have very, very important signals here that are going to need to break. And so far after hours, just this really clean little hourly bear flag. Well, more of a pin it, but yeah, well, it'll probably turn into a flag to be honest. But we've got that right there. So shorter term, looking at tomorrow, 39.45 will be key support. This is support back, if you guys remember, back from mid-November to mid-December. The probability lean, as long as we're here, as long as that holds, we can see a relief bounce back up to 39.75 and then possibly 39.95. And again, this is all right in here, and this will be posted for you guys, you know, here after this and then in the morning. And this will all be reiterated in the morning with what happens overnight and pre-market, obviously updated. And then that's what we kind of look at from there. 39.45 fails. We very likely sell further to 39.20, then ultimately back to 39.00. Let's go ahead and back out so we can kind of see what I'm talking about here. Back out a little bit. And see, you can see I have these already always labeled here for you guys. So, this must hold. Failure invalidates current uptrend. That's what all of these things mean. Now these are all starting to come back into fruition, right? So these are starting to probably make sense. It's like, oh, that's why they have these here. This is why they're posting these every day. This is exactly what it means. So let me explain that again, okay? Because this is very important. Probability lean, as long as that holds, we can relief bounce back to 39.75, possibly 39.95, and the price path will be drawn on here. 39.45 fails. We very likely sell further to 39.20, then ultimately back to 3900, where we learn how real this correction is. As always, no crystal balls. We'll be trading at level to level, one move at a time, whatever way price tells us it wants to. Overnight pre-market updated battle plan will be out at 9 a.m. as usual, and we'll be live on stream from there, fam, okay? So have a good night, and we'll see you guys on the flip, boys. And yeah, that's about it. Just look for those things. Cheers, boys.